But hear me out. It's red. It's got carbon fiber. It's got. We're gonna put a bi-turbo on that big old V8, or maybe they're gonna do a supercharger. I want it. Or are they gonna charge it? Maybe like 100 grand. 100 grand. What's going through my mind right now is if I had $100,000, would I rather just like buy this Camaro here, this last time they're gonna make the new generation Camaro? Or what if I took that $100,000 and did something crazy and boring while everyone else is still out YOLOing their money and buying dumb stuff like that? What if I took that 100 grand and bought stuff in the stock market? Maybe some crypto assets? I really think that a lot of this stuff could 10x within 2 years, 3 years, for sure. That's my opinion. That's how I'm starting to look at stuff. That's cool, but would I pay 10x for that? I wouldn't. I still wouldn't pay 100 grand for that. But that's how you got to start thinking. If you want to do something weird, this is the time to get weird. You know? Don't go match your friends and buy something they just bought because it's cool. It's not time to do that. In 1 year and 2 years, they're going to be saying to you, it must be nice. It must be nice you had that extra money and no extra car payments and we're able to what? Buy the dip, bro. Are we here yet? Is it time to buy the dip? It might have been Friday. We still have this epic battle. The guys on top and the puppets. All right, we got the Bulls and the Bears. Who's going to take over? Let's get to the Bull side right out the gate. Bull side right out the gate. We can handle that. Puts, flow, options. Y'all heard of that? Calls. What do we got? They have walls. How do the big boys do it? They say, I'm going to bet both sides. I'm going to go bull and bear. Does that sound like anyone you know? They go bull and bear. When it gets close to one, they sell one, then they buy the other. And when it gets close to this one, they go to the other. Did you know that we give you information here to show you where those brackets and walls are at? Usually, when we get to the bottom end of the put wall for the big institution bros, what happens? Stocks usually start going up to the right on this chart. Start going to the right to increase in price to get what, where? To the call wall over here. And once they get over here, what do? Ping pong, back and forth. You get it? So if JP Morgan has like whatever billions of dollars betting that stocks in the next 3 months are going to go from $3,600 to $3,815, $55, where do you think the stock market's going to go? Somewhere between there. That's all I'm doing. That's all I'm doing. Check this out. Whoop, that's not what I wanted to see. Where is it? We got like 27 tabs open here. That's not what I wanted you to say either. Here we go. This one. So, what in the heck is this? This is my new color crayon drawing I want to show you all here. We've actually had this up for a week and a half now or something. I talked about this videos before. What do we got? Remember the box, the ping pong. Okay, now we're going vertical and horizontal here, but we got the price structure for JP Morgan in this golden box. So far, since we figured this out, guess what? We've stayed in his golden box. It's all about JP Morgan's golden box. $3,835 is the top. The bottom is 3481, 82, somewhere around there. So far what? We got kind of close to the top, and guess what? We were going bear. Right? We sold the bulls going bear because we thought it was probably going to go down soon. We didn't get perfect entries all the way up. We don't nail it every top, you know, but at least I'm getting prepared to go towards the right direction. Okay, so what do? We drip down. Now what do we have? You see this sideways thing here? We got this big VWAP shelf, right? Everyone's like, dude, there's a lot of buys and sells here. It's got to break out of this horizontal line where basically we ended on Friday, which of course was the biggest open interest for what? Options. So the volume weighted interest where most people are buying, all that is right there. The options interest was right there. That's where we ended up. Go figure, right? Of course it's what happened. I'm kind of thinking this green line I drew in here. I'm thinking maybe next week, maybe only like 1 or 2 days even, we might just get a Hail Mary up. Hail Mary up. Gonna mess around over here in this VWAP territory, and then we're just gonna we have to knife. We have to just slice. Now remember, tomorrow is the Wolf Moon. What does that mean? It's a full moon. Full moons, 9 times out of 10, stocks go up. At least within a couple days of that date of Monday, stocks usually fly. Doesn't mean they're not going to then go back down, like we have here. But this is kind of what I'm projecting, somewhere along these lines. Now, what does that mean? I sold a lot Friday, because we're sitting where? Completely neutral. So I'm sitting pretty much completely neutral, okay? I still have some downside protection, and I started longing some equities, by the way, just started dripping in, taking any fun money and just forcing myself to just buy some stocks, right? Because I don't want to pay 10x, because I can probably get that stuff 10x cheaper here in a year. I really think you can get like any of last year's models cars, probably like 90% off in a year or two. So what are we doing? I'm going to wait, and hopefully we get a pop on Monday morning, or I guess it'd be Tuesday. Tuesday morning, right? Because we have a Columbus. Is Columbus Day this Monday? I don't even know. Let me know in the comments. But I'm going to start shorting it just like I do every time. We're still in a bear market. So I'm going to be mostly bear, and just follow this baby down. Maybe the 15th. There's a lot of confluence about the 15th of the month, the 3rd week of the month. All sorts of confluence going on towards the end of October. And then what? We're going to get close to JP Morgan's bottom of his box and then head towards the top of JP Morgan's box. By the way, his box last month, could you guess where it ended? Would you guess here? Do you think that would be the bottom of his box last month? Right here. Right around here, I think. So what he's doing is his whole fund and all that, not just JP Morgan himself, but the whole fund. They're basically taking that box and they're lowering it every quarter about 20%. Why? Because even in bear markets, the S&P, the major future stuff, they only go down on average of about 20%. So what does he do? He takes his profit love box and moves it down another 20% for the next quarter. Okay, so he's got December calls and puts, right? He's also sitting in a lot of cash. That's all I'm doing, dude. It's probabilities. Probabilities is JP Morgan's probably going to win. Now, have they been losing their butt? Yes, but a lot of that is because these guys hold, and they could always redo it, but they do hold, just hodl onto equities and just hold them. The utilities, the Pepsi, the whatever, utilities are way down. So their overall numbers look like poo right now because they have the old school structure where they just literally hold the Pepsis and the Costco's and probably stuff like that, right? If they were just to go cash and do these boxes every month or every quarter, they would do a lot better. This is the only way they're actually staying afloat and they're not down like 95% like Cathie Wood, right? Because Cathie Wood doesn't get into those boomer stocks. She only gets into, for the most part, she gets into the cool kid stocks that are like 95% down of all-time highs. And that's why her stuff is like 95% off. But theirs is only down, I don't know what, 15, 20, 30%, something like that. Not as bad. Not as bad. Let's get to some crazy data. So here we go. Did you understand that? If you didn't understand this chart here, just turn it like this, okay? This line horizontal, JP Morgan's box. We've got to bounce around there. Let's move on to still the bull side. At least for a day, at least for hopefully an hour. Assuming an up market tape for global risk assets over the next month, there is, according to Goldman Sachs, $511 billion. Yes, that's more than half a trillion, with a T. B ain't cool anymore, T is cool now. Half a trillion to buy in stocks, bonds, and commodities. So some might go into bonds. I'm not 100% convinced that bonds are going to start going crazy yet. But you could start dripping into TLT or whatever, or something like that. I don't know. That can be compared to only 70 billion of quantitative tightening over the past 3 weeks that the Federal Reserve has done, right? Because remember, Federal Reserve said, oh, we're going to get rid of like, what is it, like 2 trillion or something like that? And we're still under 2%. So what are we saying here? They're saying that even if the Federal Reserve gets rid of 70 billion, like they did the past couple weeks, he thinks that the funds and all that have enough money to combat that. If you have 500 billion buying stuff and only 100 billion selling stuff, stock's going to go up. That is if they buy with that money. It's not 100% that they are, because there's a lot of things showing that we're probably not. But look at this. Remember I told you those CTA bros? They're losing their money on the shorts because they're buying shorts at the bottom. All right, they're buying, like the second we come to a very bottom wick after 3 days, then they buy a short. Okay, that's just what they're doing. They're the ones who are having to then cover though too. To what? Save their booty because they just made a bad buy at the bottom. Same thing with a lot of the funds. They're still doing it. So what is this showing here? The asymmetry in a pick. Conclusion is clear. CTAs will go from very hurtful to potentially very helpful, as in helpful being bull. Date, like Monday or Tuesday or Wednesday, you see this accelerated path where it explodes out like this towards November. This says that if the market falls in the next couple, 2-3 weeks, it's going to take a lot of downside pressure. So the Fed could just open up that faucet, right? They could. Just because last week, past 3 weeks, they only did, 90 billion or something? Last week, they actually accelerated. So the next 2 weeks, they could just dump that sucker. We don't know how much they're going to dump, y'all. Okay? And when there's follow-through, there's follow-through. So it could take 1 or 2 big, huge things to spark it where everyone just goes flash sell. Everything triggers on what? Once we get to certain levels, stop losses start hitting, and it's just all of a sudden we're getting like switchboards on like Tesla. Can you imagine that? Wait for that day, dude, where all of a sudden it's like Tesla's halted to the downside. Like, what if Kathy Wood? It'll probably be from her, dude. What if all of a sudden she dumps all of her Tesla? She just bought Tesla, by the way, like a week ago. But regardless, we are fighting against about $400 billion to the upside for the rest of this month. So keep that in mind. This is still bull side. Here's some more bull side, but we still got a little bit of ways out, because what do we got going on here? So soon the corporates are back in full swing. We are not many trading days away until the corporates are back buying equities again in the buyback program. And the numbers are huge. They will have 5 billion of VWAP demand per day, every day for November and December. That's 200 billion more right there of demand. But again, we're here. What does this mean? All right. So when, this is earnings season. So that's the bear side, because we think earnings are going to be going down on a lot of things, like UPS and Nike and Apple have been saying they're going to. So earnings are probably going to be bad. That's bear. But on the flip side, those companies can't, like, the day before Nike puts out their actual real earnings, it's illegal for them to buy the dip. So like the CEO and stuff, he can't buy Nike the day before he puts out a press release and files with the SEC saying, hey, we lost a bunch of money. You can't do it. Blackout period. That's basically what that means. So until earnings is done, basically, up here, we've got like a month, October, which are going to probably make stocks go down though too. But these guys can't buy the dip until they're done with those. So this is bull side, but I'm going to call this bull side starting like November 1st, October 28th, November 1st. That's what the graph is telling me. This is just math at this point, right? percentage of SPX SPY companies in blackout periods because they haven't done their press releases yet. So earnings are bad. So I think we're getting to the bear stuff. That's all I got for the bull. That's all I got. So what are we showing here? Most important chart to look at is the US 2-year yield, okay? This is like the Fed stuff, right? This is inverted here, this yield down here. Basically what this shows is every time this yield curve hits this bottom, which actually means it goes up because it's inverted again, the markets crash. The stock market crashes, which is the green. This is all this says. But look at how high we are here. Check this out. Ticker for this is USO or 02Y. Just type in US government bonds 2YR and this will pop up. You want to see how high this is? When this goes up, stocks go down. The last time it was this high was 06, right before what? What happened in 07 and 08? This is a leading indicator. Remember, this is leading. When this finally starts coming down in a fashion like this, probably a double top. We're probably going to get a nice double dramatic top. This one lasted here, May to August. So you're like 6 months, 7, 8 months or whatever, 9 months of a double top. If we get that in any sort of fashion, that means we're probably then going to start going to the downside, which means the stock market will finally start its rip up. But until we see anything like that, this is what you got to look at right here. We think this is going to get cranked up. I'll get to that here in a second. But look at this chart. This is just ridiculous, y'all. Let's zoom in. Stare at this chart. Remember that bump in the stock market where it went up the other day? Guess what? This went down. This goes up. Stocks go. Oh, wait a minute. Do we have a double top right now? So this kind of looks like it could be on the bull side still. It's technically bull side until this breaks. What? Over here. So until this breaks where this was back in into September, around 4.4, peek at 4.361. Bears are not in control. Bulls are of the stock market. Unless this breaks. If this breaks all-time highs again, which I think it will. Remember, we got like Fed type of information coming out into next week. You'd wake up one day and this thing is cranked, and then we're at new highs. It's just short everything. Not financial advice, but that's what I'm going to be doing. Right? So watch this. We do have a double top we're forming here, but it hasn't gone sideways enough, and we haven't broken, and we actually haven't even tested this actual perfect high yet. We got close, and we're like right there. We're right on the edge. The other one to watch is, of course, always the DXY, the dollar. Just watch those two, and watch Apple. You know, watch Apple if you want to try to chart that, but really just the US 2-year. That's all you got to really chart. Let's move back to this window. This is the S&P 500 Thomas's count, 1928 to now. What is this showing? On the top is the SPY, green here. But on the bottom, check this out. This is extreme downside or upside volatility. So at our peak that we just had almost a year ago now, we were all the way blasted higher than we've ever been, man. We were over at 27 above the peak. We were outside of the peak, man. It's crazy. And now we're down. We're down to -6, which, like, if you were just looking right here, you're like, man, it looks like a pretty good time to buy. But if you are in the camp that you think we are going to have something as bad or close to bad or worser than 2008, which hit -23, 2000-ish era, you know, hit -19 and -25. Set 1973, it hit -24, 18, and then 29, 1930, it hit -44. We're not even close. We're not even halfway to what 2008 was. I mean, what other recent one? Like, okay, we're just as bad now as like after the '09 stuff, you know? We even hit, I guess it's actually showing we're more like volatile, downside volatility than March of 2020. So that's actually a pretty big deal. But technically, if we don't get a crazy down move like these, it does look like a pretty good time to buy. You could literally just look at this graph right here. So figure that out in your thesis. Do you think we're going to get what's called maybe an intermediate bear market? I kind of think we do. What does that mean? I think that we're actually going to get some downside like this month for sure, you know, and it's going to go down maybe like another 500 points or, you know, 500 on SPX. It'll be like, we're at like what, 37, it might go to like 3,300. We'll probably rebound from there probably till the end of the year. But I think next year is when we'll get like the really bad spike, you know, where we just get a nasty, because remember, foreclosures haven't even started. The EPS estimate stuff is going to be bad this quarter, but it ain't going to be as bad as next quarter, which is going to be first quarter next year and second quarter next year. Ooh, and unemployment numbers and all that. Oh, man. I think we're going to get a bad route. Here's we go. This is a really good one here. This is showing the 2008 crash, the Great Depression crash, and the 2000.com crash. Basically, we all look the same. We are in the white here right now. Pause this video if you want to take a look at it. It kind of just goes with the thesis. We might not get another green day. We might just get like a flush for the rest of the month. But again, it's a hard case to make that we'll get something substantial bear in November and December. Something crazy would have to happen, which it could. Can you imagine? Like, that would fake some people out because everything is pointing to down. Everything is pointing to October down. So what if October went up? So what am I going to do? The bull side stuff I have, the equity positions I have, I'm going to just keep moving my stop up. You know, if my stock goes up 2 to 5%, I'm going to move my stop up 2 to 5%. Keep following it until I see something that looks like it's just getting ready to pop. The VIX, you know, look at the VIX. Pay attention to the VIX. If that thing starts popping. By the way, I'm just going to get some, I have some already. UVIX, remember UVIX if you want to play the VIX. Get that. How about Mr. Jeff Brown, founder of Brownstone Research? You heard of him? This past month has sold off 60% of his stock portfolio and started buying what? The stuff we've been telling him to buy. The 3X bear ETFs that everyone used to make fun of me for. And they still do, but that's okay. Because once they get cool, I'll be selling it to them. Right? Remember? That's how it works. Then we got October 24th. Dun, dun, dun. Or that week, Mr. Gann Cycles on Twitter. Y'all ever been to Tweeterville? Dow Jones Industrial Average ticker for him. He says, here it is. Just part of the reason I've been watching around October 24th, the end of October. Multiple parts of the different cycles culminating into a long with the 60-year death cycle. This is not the major low, but intermediate. That's exactly what I was talking about. Right? So again, he thinks we're probably going to get like a local bottom end of October. It's not the big boy, bad boy one where everything's really going to hell. But it'll be the intermediate one. So we can finish out the election stuff going on, you know. Think about it. Look him up on Twitter if you want. This guy is Hoff. I don't know why his thing didn't get clipped in here. Oh, right here. That's why. MF Haas on Twitter. Okay, this guy put this one out. I've talked about this too, but you know, this chart is clean. It looks good. So what do we got? Second year, new Democratic president seasonality. This is the seasonality one you want to look at if you're looking in for the micro count here. It shows exactly what I was saying. This is not updated at all because we're actually past this, but it says the same thing. Like a week or two green, bulls in control in October, and then we get a nasty rug, which will get us new local lows for the quarter, for sure. But then it's rally until the end of the year. Crossroads for this bear market. Fidelity's finally coming out with some dank stuff. Man, they said they're showing that for this bear market, we have reached the point at which historical outcomes have started to deviate a lot. So stuff's either going to recover or not. Much depends on whether the Fed will slow down its rate trajectory and whether or not earnings growth can hang in there. I don't think either of those are. Do you? Remember, the only thing the Fed is mainly concerned about, they talk about the jobs numbers. If the jobs numbers are good, they say, okay, the economy can handle me doing this. And they open up the flood vessel a little bit more, and we just get flooded with the death spiral lava stuff. QT. Pause this video if you want to take a look at this, but we are the white one here. This is amazing to me. All this data, I geek out over this data, man, so much. Kind of the same thing, you know. All bear markets around the time. Get it? There you go. This is all important sentiment indicators, not even extreme. The Goldman Sachs sentiment indicator that measures various forms of positioning is at one of its least extreme readings over the past few months. No contrarian buy signal here. Goldman is good with their numbers because they usually just calculate money. They don't usually talk about seasonality. If you're more just the math side, straight up, what did the books and PE ratios look like? Then Goldman's your man for that. I like taking a little bit of everything. And when they all say the same thing, it usually happens. But check it out. People ain't scared in their actions. Doesn't matter what they say, this is in their actions. They're kind of scared, all right? We're in the light positioning 1, but we're nowhere near these ones that we've already had for the year. So people are not scared right now. The retail bros who are just sitting on bags will give you the biggest doom and gloom thing ever. They ain't buying the VIX. They ain't buying the UVAX. They ain't buying the big old puts on the SQQQ and all that. S&P, an asset of major central banks. They're dumping. There's no sign of reversion here in the purple. ECB, BOJ, Japan. You know? No reversion yet. G4 central bank balance sheets of USD. And the blue line is the MSCI world in USD. No sign of reversion. Other than this nice bounce off this line here. But I think that's a little predated from last week. This is what we've been talking about here too for forever, for years now, y'all. And by the way, if you've been here for years, thank you for keeping watching. That's great. But here's the one you need to look at. This is straight from the Federal Reserve. They release this every week and a half. They finally turned up the dial last week, like they said they would, dude. This happens the same thing in every bear market historically. The Fed comes out and says, we're going to raise rates. Hint, hint. And when they start saying he's more aggressive, remember I was telling you, Powell's getting more aggressive, y'all. Powell's getting more aggressive. He proved it. Action. This is his action, not what he says. But so far, he's honestly been kind of following. Other than the QE, he's kind of been dripping around to make it a soft landing. Because remember, we're not going straight down here. He's gradually doing it. But you see how this curve has accelerated in the past 2 weeks. This don't look softy landing to me here. This looks like he's just opening up that floodgate a little bit. But again, we're still pennies. We've only still done pennies. Less than 2% still has been released. So just because that comparative thing at the beginning, compared the last 3 weeks to what the CT bros have to do, doesn't mean he can't open that floodgate up even more and just let this baby rip. Remember, all they care about is jobs growth. Really, that's how they're going to do it. Unemployment, jobs growth. Jobs growth numbers were good. This is all the smoke and mirror stuff to manipulate because this is like the least thing to actually show a current status, but they do that on purpose. That's why the stock market and bond market always lead everything, because they know by the time that this shows something, their job is done. So the stock and bond market can start to recover way faster than the economy will. Right? Pay attention to these numbers. They're still good. He's going to say, obviously the economy's fine. You guys can handle it. Open those floodgates. Yeah, over the shorts, not very short. Shorts aren't very short. We would assume that this is one of the best overall positioning indicators out there. Action, remember? Short interest percent of market cap S&P 500 mean. This is basically the Goldman one we showed you above. Same thing. Like, yeah, there's some shorts, but not really. The big money hasn't even stepped in yet. You know, the big private money that's just holding on to those aristocrats. Remember that. That's the other reason you got to look at the yield, the bond yields and all that, all the yield stuff. Because they're only getting, what was the calculation we talked about last video? Maybe 2% on average to hold their stocks, which is terrible. They're losing money. That's why I don't like dividend stocks at all. If we were on a gold-backed currency and there's no Federal Reserve, it's a different story. But because we have the Federal Reserve, everything is run on debt. It ain't going to work if there ain't more debt, which means decrease value of the US dollar, which means 2% we're losing money. People aren't scared yet, y'all. Is that dull? Oh, that was the calculation. Oh, we did hit over 2%. Oh, no, we didn't. Oh, I guess it depends on how you do it. Okay, yeah, no, we still didn't hit 2% from the Fed. We're down 1.619% increase. This is in billions, but this is trillions, so 8.3 trillion to start. Now we're we started at 8.5, 8.3. So there you go. We're like at 2%. Just call it 2%. All right. Fed is finally starting to ramp up the pace. Q. See, we showed you here, right? This week down 206 billion from its peak in April. 74 billion over the last 3 weeks. This is the largest 3-week decline in July. But again, the big turn on didn't happen until what? Just last week. Look how steep this is. Does this red line show you a little bit better of a picture here? How steep when the curve gets steepened and we go into free fall mode. It's a big difference from sitting at 35 degrees and sitting at 45, 75, you know. Not even there yet. More proof. There you go. There's so much homework I did for y'all. Man. Mr. Michael Taylor, 1972, said, quantitative tightening accelerates $90 billion in the past month over month. That's a lot. He agrees. It's not just me making this up. Mr. Julian Brigadin, he said, by my calculation, 100 billion of quantitative tightening is about 80 points off the S&P 500. And that's just if the Fed only does another 100 billion, right? You think people are going to follow them? Do you think you know, all the Congress people who are like, do you think they're not going short mode now? Do you think that they're not going short mode now? Come on. Mr. Alcid would be surprised if they succeeded undoing half of the QE they did since March 2020. Ooh. What does that mean? That 2020 run-up was the faucet on, but going the other way, right? It's like $1 trillion to $8 trillion or whatever. He thinks we're going to go at least halfway there. We're not even close to halfway to March 2020. Or downside. Probably right. Mr. Mark trying to look at says, first Fed pivot won't be rate cuts. It will be liquidity injections. QE. All right. So they're going to start getting money magically appearing somewhere. Maybe to banks, but they're not going to bail them out this time because we're not in a recession, right? Oh, they're just kind of borrowing it. Of course, like the Bank of England, they'll frame it as temporary. That would be correct, but only until the second time they do it. There you go. Y'all ever heard of TikTok? Mr. TikTok said he's got a few crazy predictions. He said, number one, the U.S. rates have likely peaked or close to peak. He could be right. Remember the chart above? We're kind of in a double top. If we do not bust above there, he's right. I think we could be close. I think we're going to get newer highs, though. Close? Yeah, I'll say we're kind of close. He also says TLT has bottomed, he says, or 1 to 2% off of its bottom. Now it's at 101. He could be right. We could, but at least I would say minimum 2 to 3 weeks until either of those. Number 3 is up for manipulation, interpretation. Mr. Biden, he said, will somehow be gone by the end of the year. I don't know. They're going to maybe like do like a big dramatic thing, like he saved someone, and then we got a vice president, you know. So those are predictions from someone else, not me. But there's something to pay attention to, because this is bull side, you know. Because if the rates have peaked, stock's going to probably start going up. But I think that's going to take till the beginning of November. We'll have to take a look regardless. Oh, the PayPal drama. I just got to let y'all know this. So PayPal did come out and they said if you tattletale on someone and they're talking about like misinformation, they're going to pull $2,500 from their account. Mr. Ryan Severden said, that sounds like something straight out of the communist China. I agree. PayPal has now come out though and said, we did write that into some official papers, but like we didn't like write it 100% correct. So let us like rewrite it, like, you know, so don't close your accounts, because there's been record closings of account. I've been anti-PayPal for at least a couple years anyway now, for other reasons, but something to keep in mind. I mean, this stuff, it's happening already, you know, so just pay attention. I think that's it for today's video. Did I miss anything super important? I promise you I did so much work trying to get this video, trying to get other people's opinions, right? I'm looking at numbers like crazy, talking to other people, talking to hundreds and hundreds of hours. So only thing I ask is you just tell your friends about the video. If you want to join our group, do it. The link's down in the description. You got to join the Patreon to get in. But if you're serious about making money, I don't see how you're not going to be making that back. 1 or 2 plays, why not? I don't know. Thanks for watching the video, y'all. Y'all take care. We'll see you next week.